As the BHP Billiton hostile takeover bid for Potash unfolds, some on Wall Street are wondering if the recent wave of M&A deals signals a resurgence for the industry. Frank Aquila is a partner at Sullivan Cromwell, where he has advised global leaders like Amgen, British Airways, and InBev on M&A and matters of strategic alliances. He joins us now with his read on the market. Frank, welcome back to Bloomberg. Always good to have you on. Talk to us about this resurgence. Even though we're hearing a lot about M&A in the news, it's still running a little bit low what we were seeing last year. Isn't that right?
I mean, clearly, Mark, what we're seeing so far this year has been below what, if I was here last December or January and we talked, and I think we might have, I would have expected much more activity so far this year. Just because at the end of last year, the economy seemed to be recovering. Companies had a lot of cash. There was a strong strategic rationale for doing deals, and people were starting to work on deals.
But isn't that cash still on the sidelines?
That cash not only is on the sidelines, but it's actually growing every single day. And I think what we have not seen is the real surge of transactions that I would have expected, and I guess I still expect. All we need to see, though, is a catalyst. And I think that catalyst is going to be some assurance that either the economy is bottomed out, we're not having a double dip, or that we're going to have some sort of fairly strong global recovery.
I mean, it's interesting, though, because since we have seen stocks decline, you would think that companies, even in a tough economic environment, would be looking for bargains right now, for low valuations. And yet that hasn't been, I mean, it doesn't seem to have been enough of a catalyst for just regular stock investors either right now.
Right. And when you think about an acquisition, it is the ultimate investment, because, you invest in a stock and 6-9 months, you don't think it's performing, or the fundamentals aren't what you thought they were going to be, you can sell it. On the other hand, you make an acquisition of the sorts that we're talking about, you really have to make that work, and you're really stuck with it for a long time if it doesn't work. So companies and managements, and I think this is really where the issue is, they have to be assured that the value is a good one, not based upon where the stock was trading at 3 years ago or 6 months ago, but where it might be trading at, where the market might be trading at in a year's time. So that's really when you get back to the fundamental economy. And if the fundamental economy is not necessarily resurgent, but certainly one where people are not concerned about further job losses and things of that sort, that's when I think you're going to see corporate America and multinational companies really jump in here, because they have the cash, they can certainly borrow more at historically low rates. The strategic rationale for most of these deals remains very, very strong. The trend towards globalization is very, very strong. So you have all the elements of a bull market in the M&A space.
Is the premium that some of these targets they're demanding, is that also a bit of an obstacle? I mean, you look at the Potash BHP situation as just one example, where Potash says it's not enough.
Everybody always asks me about premiums, and I think we've actually discussed premiums before, and it's easy from the outside looking at a deal saying, oh, that had a 25% premium and this had a 40% premium. The reality is I've done deals where the premium has been 90% and my client, the buyer, probably got a pretty good deal. I've had other situations where the premium has been minuscule, but as a seller, we got a very good deal.
It's all relative.
It is definitely all relative.
So what's the last catalyst that's needed to push this over the finish line? Is it confidence?
I think it's a certain degree of confidence in the market that may come in a variety of different ways. I think that when companies see other companies moving forward with big deals, hostile acquisitions, that I think will give managements and boards some degree of confidence that it's okay to get back in the market.
Where are we going to see this happening when there is this, resurgence in activity? In what kinds of sectors?
I think, clearly we're going to see it, basic materials, energy, anything that has a global play to it. But beyond that, I think if you look at the deals we've been seeing them in a lot of different sectors. And that's something you normally see when you have a very strong M&A market. Typically, when M&A markets are weak, the deals are isolated to one or two particular sectors. We're seeing deals across the board and across geographies. And what that says to me is that given the other factors that I just mentioned, we could see a very strong level of activity.
And okay, I know that you can't talk a lot about the BHP deal, but I guess the question is it going to happen?
Well, one of the things I would say is I tell my clients when they're considering doing a hostile bid that once you go public with a deal like that, you have to be pretty committed, not to pay any price or not to do anything you have to do. But you have to be pretty committed to go forward because your reputation's on the line, your credibility's on the line.
Don't take the gun out.
As Adam just told us, only 1 in 3 hostiles since 2000 have actually succeeded.
But I think if you look at in the more recent time period, when you had the likes of BHP Billitons and InBevs and Pepsis and Crafts, their success rate is much, much higher. I think if you look across the board with financial buyers and green mailers and whatever, you're going to have a lower percentage. You look more recently when you have the really big names, those guys are being successful.
Do you think that part of that is because in this environment, shareholders see all this cash on the balance sheets and they are not getting it necessarily in the form of dividends or buybacks, so when a hostile takeover offer like this happens, they might be more eager to sort of jump on that? Well,
most shareholders or institutional shareholders, they mark their portfolio to market every single day, and a 30% premium on something that might be 5 or 10% of their portfolio represents a very good gain.
Frank, in our last 20 seconds, in the next few months, are you expecting to see a lot more M&A activity?
Clearly more M&A activity than we've seen over the course of the last 6 months. Whether we get back to sort of 2005, 2006 levels, I doubt it. I think we'll see more of that in 2011 and 2012.
All right, Frank Aquila, partner Sullivan Cromwell, joining us. Always good to talk to you. Thanks so much.